Hey there, everybody. Good Tuesday afternoon. Boy, if you like market action, you're loving this market. There is no question about that. So, welcome, welcome. Please let me know if you can hear and see me okay. We are going to be talking about the VIX today, but first, I'd like to know if any of you joined us yesterday after the close for our discussion on. I'm not Mike. Are we getting people in here? Because I don't see. There we go. Phew. Cheyenne, thank you. If you joined us yesterday after the close for our roundtable on the crypto reserve and that whole, I should say, there's a Yiddish word that my mom, may she rest in peace, used to use called mishigas. Mishigas is a Yiddish word for meaning confusion, a pile of crap, just a mishmash. So that's all what this really was. And I'm hoping that that was helpful yesterday. And if you'd like to see more of those in the future on the hot topic of the day, the week, whatever is really in the news, um, let us know. Let us know. Cheyenne, Doug, Paul, I see you guys. Do we have more people in here, Michael? Or what's going on here today? If people in here could let me know you could see me, please let me know and smash away. Please do that. All right. So, what is the VIX? And how do you trade it? And what does it mean? And what does it really signify? And who watches it? Is it for retail? Is it for institutional paper? Is it for just the big firms? Gene, we can do that. Oh man, we can do that. That would be so much fun. I'm not sure we'd get a lot of people, but yeah, we can do that. All right, so the reason I have this picture up here is because I actually have done a big deep dive and a big video on what is the VIX, and you can find that in the Prosper YouTube channel. Okay, in some of our education, so there's a big explainer there. But what is the VIX, everybody? Okay, everybody that listens to CNBC, Fox Business, Bloomberg, even if you just turn on your regular news channel and they happen to do a blurb on the market, they may say traders are watching the VIX, the so-called fear index, right? So what is it? So the VIX actually came out. The CBOE launched this product back in 1993. Okay, thank you, Steve. And what it is a financial benchmark, which is designed to be fluid in the marketplace, up to the minute, of expected volatility in the S&P 500. Okay, 30 days out. And the way that it is calculated is it takes the midpoint, okay, or the mark, what we always refer to, okay, of real-time SPX options. Okay, so it is an up to the second measure of how the market thinks the S&P 500 is going to move in the next 30 days. Okay, that's what it represents. It is completely 100% correlated to the S&P 500. Paul, oh man, Paul, I got to do something for you bringing that out. That is awesome. That is awesome. So let's talk about how it's actually calculated. Okay, I just told you what it is. It takes S&P 500 options to calculate this. However, what it does, the actual formula, which you can find on the CBOE website, I'm not going into all the math behind it, okay? But it takes the regular standard SPX options And when I say regular, what that means is regular is expiring at the end of the day. There are S&P options that expire in the morning on the opening print of the market. Those are not included in the calculation. Thank you, Tim, about that yesterday. I appreciate that. So the VIX takes standard S&P options, both weeklies, okay, and the monthlies, okay, that are listed for trading. The standard options expire third Friday of each month. Now, those are the ones, and if actually let me bring this up here so I can show everybody. Hang on one second here. Okay, so if I were to bring this in here, what you will see, and on any platform that you guys are choose to run on, what you are going to see is for SPX, not SPY. Okay, these are SPX options for the regular monthly expiration, which this month, this Friday happens to be the third Friday happens to be the 21st. You're going to see that there is an AM and then a regular end of day expiration. Okay, that only happens, that doesn't happen every Friday on the weeklies. That happens on the monthlies. So if we go out to April 17th is regular expiration, the third Friday of the month. You'll see there's an AM and a regular expiration. AM's not included in the VIX calculation. Okay, so third Friday of the month and weekly SPX options. Okay, now the ones that are used to calculate, think about this. Because the VIX is a representation of S&P volatility 30 days out, okay, we're not using today's options. We're not using tomorrow's options. We're not using next week's options. The VIX is calculated using S&P options more than 23 and less than 37 days. That gives us that 30-day window. Okay? Does everybody understand that? That's really important because a lot of people will look at, S&P volatility. Okay, and let's look to see where this is right now. I'm sure it's pretty darn high. If we were to look at just looking at this week's vol, even let's see, what is the end of the week? The 7th. This Friday is the 7th. If we were to look at the money vol in the S&P right now, we're looking at 29. Okay, VIX isn't trading 29. Okay, so it's 23 to 37 days out. That's how it is calculated. Now, how does the VIX move? How is it correlated to the S&P? I think we all probably know or understand, or at least just from, watching TV, that it's pretty much an inverse correlation, right? Why is that? Well, think about the fear, right? When do you feel fear in the market? When the market's going down, right? That's why this is measured or known as the fear index. So the general relationship is that the VIX has an inverse relationship to the S&P 500. VIX or volatility typically increases when the market is moving down. The reason why? Uncertainty. Nobody likes uncertainty. The market doesn't like uncertainty. And then when we see the market rally, typically we see the VIX come down or at least remain steady. Does that happen 100% of the time? No. Does it happen the majority, way more than the majority of the time? I can't speak. The majority of the time, yes. Okay, inverse relationship, which is why if you put up a graph of the S&P versus the VIX, they'd move like this. Okay. Now, the way that we can kind of think about the VIX is the same exact way that we think about implied volatility for any stock. It's mean reverting. You've heard me use that term over and over and over and over and over. It's mean reverting. Volatility is mean reverting. So we know, and let me bring in a chart of the VIX right now. Come on, there we go. There we go. Okay. Here is on the bottom the implied volatility of the VIX. That's called the VVIX. So this is really VVIX down here. That's the implied volatility of the VIX. If I show you what the actual VIX is, okay, you can see how mean reverting it is, just like the implied volatility of any index, any stock. Gets to a certain level, and that's, typically a sell point. Gets to a certain level, and that is typically a buy point. Now, we are at right now, and for those of you that joined in yesterday in our roundtable and then actually followed the discussion later on Twitter with me and Kevin Green from Schwab Network, you'll know we were talking pretty heavily about this area in the VIX. Make or break this 25-ish area. Okay. If it couldn't break through there, we're due for this thing to come crashing back down. Now, when I say crashing back down, does that mean 10, 12, 13 where we stood for so long? No. Does it mean mid to high teens? Yes. If it breaks here, there could be a really big break to the upside. But this 25-ish area right here, that has been really, really incredible resistance basically for the last, year and a half. Okay, so it is mean reverting. Now, VIX options, unlike regular equity options that expire on Fridays, VIX options expire at the opening of the market on Wednesdays. The last opportunity to trade a VIX option for that particular expiration is up until the close on that Tuesday. Now, just because the VIX may close, and I'm just throwing this out there, at let's say 20 at the end of the day on Tuesday. So for instance, there are VIX options that expire on the opening tomorrow. Tomorrow is Wednesday. Okay. Those are the March 5th expiring options. Today is the 4th. Tomorrow is the 5th. Those will cease to trade after the close today because they expire on the opening print tomorrow morning. But just because the VIX closes somewhere today, let's say it happens to close at 20. Again, I'm just using a nice big round number here. That doesn't mean that's the closing settlement price. Okay? If we got a really big move tomorrow morning, pre-market, up or down, that VIX settlement price could be far different than the 20 that it closed at today. What do I mean by far different? We're not talking 16 or 25. It could be 19 or 21. More likely, it could be 19 and a half or 20 and a half. Okay, which then poses an issue because let's say VIX closes tonight at 20 and you're long the 20 call options. Do you exercise them or not? You don't know, right? Because 20 is not the closing price. Wherever VIX opens tomorrow, you're not going to have the opportunity to trade that option. So you need to close it out or roll it, or you can just let it ride. And then wherever that VIX print, the VIX settlement is, let's say it happens to be 2021. your 20 strike call option's going to be worth 21 cents. VIX options settle into cash. They do not settle into a future. They settle into cash. So there is no early assignment. There is no early exercise or assignment on VIX options. They are European style options. Everything is settled into cash. Okay, let's take a look at some live quotes right now for a moment. Okay, here are the VIX options that expire tomorrow. Right now, live in the marketplace, current right now, VIX is trading 23.51. Those call options are trading 67 cents. Right now, they're 20 cents over parity. But is that what they really are? Is that what they really are? We don't know. We don't know where VIX is going to settle tomorrow. Likewise, the 23 put option, look at this. The 23 put option that expires on the opening print tomorrow. It's actually out of the money, right? It's VIX is what, 23.58? 58 cents out of the money, but it's trading $1. What is this price on this VIX? And this can change. I am not suggesting you trade on this right now. What is this suggesting? The fact that this put option, this out of the money put option, is trading much more expensively than this in the money call option. What is that suggesting? What is the bias in the marketplace, at least for these options expiring tomorrow morning? Anybody have an idea? Anybody want to throw a guess out there? We crushed it in NVIDIA today. Exactly. The market thinks that that VIX settlement is going to be lower tomorrow morning. Exactly right. Okay, so it'll be interesting, and I will make a note of where VIX closes today, and then what the settlement price is tomorrow, and I'll come and I'll report back to everybody. So let's look at this, and this has changed dramatically. This is just from a half an hour ago. Okay, we know that VIX is a futures product. So we see that's the current VIX. Well, this was current a half an hour ago. It's now down to 23.80. It's come down a little bit as the market has rallied back. That is what options that expire tomorrow is tied to. If we look at regular March expiration, so the third Wednesday, it's lower. And we can see the VIX just kind of staying steady, maybe creeping a little bit lower the further the expiration. Remember, this is a futures product. VIX options are not like regular stock options where regardless of the expiration you're trading, it's tied to the same stock price, whether it is March, April, September, January expiration. Here, the options you trade, that expiration is tied to that specific future. So if we were to go out and trade August VIX options for whatever, if we were to take a position, we would not base that off of 25.29. We would base those options off of 20.92. Okay, now let me show you. This kind of goes back to the graph I had put up earlier, which I'll put up again, of this is the VIX on my chart for the last year. What I did here was I took 3 snapshots of the VIX. And actually, before I do that, let's get this out here. Word of the day. Word of the day. Okay, give that another minute or two. Who was it? Let me go back. I'm looking back in the room here, in the OV room for a second. Who was it this morning that told me of my mistake? Come on. Who told me of my mistake? If you are in Market Minds right here, guys. Oh, Raja. Raja, are you here? If you are, let me know. Because I want to add your name on the wheel a few times, Raja. Okay, so let's go back to this here. This is a snapshot here, guys, of today's VIX. This is the intraday. So this is how VIX has traded today. Started opening the morning here right around 22 and a half. It spiked up to just over 26, and now it's back down to about 24. This chart here shows 6-month VIX. Okay, daily close 6-month VIX. And again, you can see that exact resistance we were talking about. And here is a 1-year look at VIX. And you can see again that same resistance we're talking about. Boy, it hit there this morning and it's come crashing down. It's the chicken and the egg. That, you know what? These days, that's probably a real. Oh, wow, it's really snowing hard again. Awesome. That's a really bad analogy because eggs are so darn expensive now. But did the market rebound back today from S&P's being down 120 points to now being down 50 because the VIX came down, or did the VIX come down because the S&P's rallied? Right? They work hand in hand. They work hand in hand. Okay, let me go back to this screen here for a moment. This was the VIX futures curve literally like 45 minutes ago. Let me show you how that has changed just over the last 45 minutes. Let's see if I can get these side by side. There we go. Okay, can everybody see that side by side now? So this is that what's called spot VIX, the here and now, the options that are expiring tomorrow. When you see VIX on TV, that's the VIX they're going to report. That has come down almost about 7-8%. Okay, the futures have also come down. Not quite as much because the futures typically don't move as quickly or as rapidly as second by second as what the current or what's known as the spot VIX moves. But you can see the whole curve shifting. Now, I want to show you one more thing because we've talked about contango and backwardation. We've talked about contango and backwardation. Contango is a term structure for a futures product that has an upward sloping graph to it, where futures prices are more expensive than current prices. And that is a typical market for futures. Okay, so what I did here is I wanted to show you an example of the market being in normal contango. So what I did is I went back 1 month here, and this is what the VIX futures curve looked like a month ago. Okay, spot or the current VIX at the time was 14, and you can see prices moving higher and higher and higher and higher the further we go out in time. Now, fast forward that to today, and you can see how that has changed dramatically. And this happens when fear hits the market. We see a spike up in, think of it, the easiest to grab asset we can get, or the easiest to grab piece of protection we could get. That's the closest expiration. And then you can see here now, VIX pretty flat throughout the rest of the year. This is called backwardation. Okay, normal futures curve looks like this, where it's upward sloping. When things get extremely volatile or that fear kicks in, that curve changes to something like that, like what we're seeing right now. Any questions on that? Any questions on that at all? Or any questions on anything? Okay, now, last thing I'm going to talk about with the VIX for right now, before we go to the wheel, and you just all had the last call for the wheel, is what is the reason that we don't trade time spreads in the VIX, calendar spreads, diagonals? Okay, the traders in the pit do. I trade them on my own, but we don't trade them here. Why is that? Anybody? Anybody at all? Why don't we trade calendars and diagonals? RJ, that's the perfect answer. I don't know. No, I'm serious. Nope. Doesn't have anything to do with not being able to exercise, because we could always roll them if we did, Bill. I like the answer, though. I like the thought process there. Excuse me. Anybody else? Remember what we said about VIX options. What are the VIX options tied to? They're not all tied to one price. So when you get to the expiration of that front month option, we don't know what that other option, a week, 2 weeks, 4 weeks, 8 months out, whatever it might be, we don't know the pricing of what that's tied to. So it throws a huge monkey wrench into us being able to identify what the real fair value is, because we're really comparing apples to oranges. We're not comparing the exact same product like we are when we trade in a particular stock, and the different expirations are all based off the same stock price. Okay? Makes sense to everybody? All right. It doesn't make sense to you, Steve? Okay. Let me put it to you this way. Hang on. I'm going to hold on to the wheel here for a second, guys. Okay. Here's the VIX futures curve. Okay. Let's say I sell a March, this is March expiration. I don't know, I sell a March call and I buy an August call. Okay. When it comes time for the expiration of this option here, that futures price, wherever it may be at the time, is absolutely not going to be the same as that futures price. So what you're doing is on a futures curve, if there's an expected announcement, down the road at some point, okay, maybe that vol is going to be higher because there's a Fed meeting or whatever it might be. We don't have the ability to gauge what that difference is going to be. Steve, let's go back to this again also. And I think, this will be posted up here. You're probably going to want to watch this again. The VIX is calculated looking at a 30-day forward window. I don't know what the 30-day forward window is going to be in, April. Is it going to be the same as it is in August, September, December? I'm not saying you can't trade calendars. What I'm saying is it's almost like you're trading two different stocks against one another. And it goes that way for any futures product, not just VIX, any futures product. All right, let's get back to the wheel here, guys. We didn't have one yesterday. Today, is it going to be Tire Doctor, Troy? Tire Doctor, that's a new name on here. Who is the Tire Doctor? Are you here? Tire Doctor, are you here? Bingo. Wonderful. Congrats and nicely done. Please send me an email to prosperswag@prospertrading.com. Let me know your mailing address. There you go. It's posted up there. Mailing address and a swag size. As always, if anybody ever wants to review any of our market minds, they are out there on our YouTube. All right, everybody. I hope this was helpful. Okay, we have cut the losses in half for the day, hoping that continues to the end of the day. One of the things that, for those of you that are in either of my rooms, you'll know what I said earlier, and this is not political, but when we were down at the lows of the day, I said, this was just my gut feeling, my trader spidey senses, that with President Trump addressing the nation tonight, there was no way the market was going to stay down like this today, that some news was going to come out. Whether he comes out and says, demands that Powell lower rates right now, something. Maybe that doesn't happen. Maybe we close down at the lows of the day. That was just my feeling. All right, everyone. Have a fantastic rest of the day. And I think Mike Clark, doesn't Charlie have a webinar tonight? Anybody that wants to know more about AI? I believe there's a Webby tonight. Anybody interested in listening to Charlie and his how he trades the AI space? Because he is going to break it down live tonight. Let me get a link for that. I will post that up here in just a moment. Still waiting on that. Hang on, everybody. Don't go away. Don't leave me yet. Don't leave me quite yet. I should change my background here so you can see how heavy it's snowing out here. It's awesome. We needed it. We really, really needed it. I know I'm trying to get this link here. I should have it, right? From the CEO, I should have this link. Thank you, Anthony. You are in Charlie's AI class. I love it. This is, I mean, you're more than welcome to join the Webby tonight, but this is for anybody that just wants to learn more about trading. There we go. Okay. There it is. Anybody that would like to sign up or just get more info, listen to Charlie tonight. There you go, guys. We have had that. Hey, Rennie, we have had that. I will look for the recording of that to get to you. John Gebhardt, boy, after the 4 to 5 feet of snow we got about 2 weeks ago, it's all gone. We really needed this refresh. That is for sure. And there's more coming, which thankfully is good. You know what? Here's a little shorter link, guys. There's a little shorter link if anybody is interested tonight. Okay, everybody, thank you for being here. I always appreciate all of you guys. I really do. Have a great rest of the day. We'll see you later. Bye-bye.